Well, we are going to go ahead and get started. So that way we don't hold you guys up for too long so you can get back to work or back to your daily routine that you need to do or want to do. Yes, I am LaRonda. LaRonda White is my name. I am the trainer for Fort Sill Federal Credit Union. July will be 15 years that I've been here. And I've been in many different positions, but being able to come out and talk to you guys is something that I really enjoy getting to do, to share what knowledge that I have with the different things in life skills with individuals as well. With me today as well, I have Danny Landman. He is our Chief Lending Officer, so he is the man for loans here at the credit union. So he's going to share that knowledge with us too. And if you guys have questions along the way, feel free to just ask. I don't mind at all. So first thing that we have is, why does credit feel like a mystery? A lot of us do not have any idea of how to create credit or what it even is. There's complex terms and jargon such as APR, APYs, for instance, credit utilizations, hard and versus soft inquiries for your credit report. What is the difference in those? Different scoring models, so FICO versus Vantage Score. Do you guys use Credit Karma at all? Use Credit Karma? Yeah, use Credit Karma as well. So those are other, like a third party type thing that you can track your credits. You can see your score as well. Your credit score on that's going to be different than what your credit score is that financial institutions use. That we pull, because the algorithm of their calculating is a little bit different of the information that they utilize than what we use. There's lack of financial education to individuals out in the public, so we all kind of just go out there blindfolded and we either sink or we swim and figure things out as we go in life. And there's a lot of misinformation. If our parents didn't teach us or the school didn't teach us, then there's no way for us to know, right? So that is another reason why we're putting this on today, is to educate individuals. And then that way, like for you, that you are educating individuals in our area, help you out a little bit more as well. So understanding what credit score ranges are. So your credit report is just like when you're in school, you're graded. The lower your score, the lower it's not good. The higher your score, the more you're going to be excelling in school, right? So A's are good, F's are not. It's kind of how your credit score goes as well. Your credit score ranges from an 850 down to 0. Having no credit is just as bad as having bad credit in a lot of cases, depending upon what you're trying to purchase. When you come in and you're looking for a loan, we will pull your credit, and based on where you range within these, it's going to depend on what kind of interest rate that you get as well. So trying to keep at least a good score. Fair is good, is okay. You're still going to have a higher interest rate on your trying to purchase a home or trying to buy a car even, where you're higher the interest that you're paying, the more that loan payment's going to cost. And the more you're going to end up paying whomever you're borrowing as well. Okay. So what makes up your credit score? Your payment history makes up 35% of what your score is. So making your payments on time is very important. One late payment can really be detrimental to your credit score. Your credit utilization, which is your balances. So we have credit cards. Most all adults have credit cards, and with the economy the way it is, most individuals are having to live off of those, and they are maxed out. In order to keep your credit at a balanced, good rate score, you want to keep it at least 30% or less charged. If you're trying to rebuild your credit as well, or build your credit, you're going to have to use your credit cards in order to do that as well. If you're trying to build or rebuild, you have to be in debt a little bit in order to do so. Yes, sir?
If I stop using my credit cards at all and they're always 0, does that improve my credit score?
How about that, Danny?
Yes, it does. Okay.
Yeah. So it doesn't build it as fast as if you're utilizing it and pay a little bit of interest, but it'll keep your score good. Yes, ma'am.
I have a question about which credit cards would be best to start building your credit, because if you don't have any to start with.
And we'll talk about that here in just a few.
Okay.
We'll get that one too. Your credit history link, so the longest line of credit that you have, it makes up for 15% of what your score is. So your credit cards that you have had for the longest period of time, or loans, open-end loans, like a line of credit, for instance, you wouldn't want to close those out because those will make your credit score go down if you close those out, unless you're not needing your credit at all, but we're trying to build or rebuild it. Does that make sense?
So if you pay off an old line of credit, but you ask for a statement saying I've paid this off, does that keep your credit open? Or is that just paying that off and asking for another line of credit?
So with the credit card, it's kind of like when you go to the hospital and the doors that keep on going. It's just like that. You have that revolving line, so that credit card is always available for you to use. You pay it off, that never stops. You're able to reuse it over and over and over again, unless you want to stop it. So if you want to close it out, then you would have to call your financial institution. So you'd have to come see one of us and say, hey, I want to close out that credit card. I don't need it anymore. I want to go ahead and close it. So then it would be closed out because you'll have to sign to do so.
But that affects your credit.
That will affect your credit.
Okay.
Yep. If you have too much credit, too many credit cards, that can affect your credit as well if you have too much open line.
Thank you.
You're welcome. Credit mix makes up 10%, so that's going to be your different types of credit. So car loans, home loans, credit cards, having all those different things. But being mindful and not over getting loans as well, keeping it right to where about 50% or less of your income coming in. So how the credit bureaus are different. So we have 3 major credit bureaus. There's Experian, TransUnion, and Equifax. Different financial institutions use different ones. Some use all 3. That each one of them also has a slightly different score for you because of how their algorithms are as the pieces of information that they pull to make up their credit score. They're not going to be off by much. Some will be off, one may be 650, one will be 655, and one 700. TransUnion seems to generally be a little bit higher than the other 2. Some companies will use the middle number. Some will use the higher of the 3. Some, like us, we pull Experian. Yeah, Experian. We pull Experian for our loans. So we just go off of what the one score is. So your credit, when you're going to rent a home, they pull credit reports. So your credit worthiness is going to matter on renting a home even. That will either make you have to put a larger down payment down, deposit down to move into a home if your credit's not real great, or if you have no credit. Same with a mortgage. Same deal. Same. Questions on how the credit reports differ from each one of them? So here again, here's your mortgage lenders. They're going to look at all 3. They'll generally use your middle score for doing a home loan. Your car loans, again, Equifax or Experian, and then credit cards is going to be different per institution. So here's types of credit and how to build them. So revolving credit, that is what we were talking about with the revolving door. So with credit cards, if you, like for you, you're trying to try to build your own credit because your husband carried yours.
Like in my own need.
Okay, so, okay, very good. So, and that's something that you're going to need eventually. So we do have what's called a shared credit cards or shared loans, which is where you use your own money to collateralize those loans. So these are for people that either have no credit or have bad credit and we're trying to build them. So you can use, let's say you want to start at $300. We'll take your $300 and put it on hold, and we'll give you a credit card with a line of $300 on it for you to spend and use just like a regular credit card is to be used. You'll pay an interest rate on that. Ours are 12.5% for that base loan for the classic card. So you make your monthly payments monthly on those cards, and we report to the credit report that you're making your monthly payments. You'll generally see your credit score jump anywhere from 50 to 100 points within about 2 months with doing one of these. And I say that because I've done them for several individuals, and they come back to tell me their success stories.
This is the one that I saw on your website to do? To get this done through Federal Credit.
For credit cards? Yes. Yep.
Cool.
Yep. So we have share secured.
So this would be good for me.
This would be excellent for you. And then once you have credit built up, once you have it, let's say for 6 months to a year, and then you decide, okay, $300 isn't enough. I want to see about extending that to $1,000 or maybe $3,000. Then we can see about getting you a loan to where you're borrowing our money instead of using your own money as collateral.
Because the bank has more money.
Thanks to individuals like you for being members for so long.
I am funny.
You are. I love it. It makes it go great. Again, making sure that $300 limit, that you're not taking it and maxing it out every single month, and by the end of the month you have it maxed out, because we're going to report that you're using 100% of what your limit is that you have borrowed. If you do that, then your credit will not build near what you need it to do or rebuild. Okay. Always making sure that you make at least your minimum payments to your credit or to your debt. At least your minimum. If you can make more, do so. You're going to pay that debt off in at least half the time if you can make a payment and a half each month on your debt. Be close to about half the time for that loan. Avoid, then, yep. All right. Do you understand the difference between what a secured line of credit would be and just a regular credit card? Okay, very good. Danny, anything you would like to add? All right. Installment credit. So this is going to be like for auto loans, for mortgages, student loans, or personal loans. So these are where once you pay it off, it's done. It's not revolving like a credit card. Okay. So these have fixed loan amount payments. So these payments do not fluctuate like a credit card, because credit cards are going to be based on what you have charged on that card, will be what your monthly payments are. To where these, you may come in and you say, I want my car loan to be at $500. If we can get you in at that loan at that price, that's what you'll pay for the life of that loan. Same for a personal signature loan. Do you guys know what signature loans are? Mm-hmm. So a signature loan is where you come in and let's say you're going to go on vacation and you want to borrow $3,000 so you can go to Hawaii. We can see about getting you approved. You get approved for it. We're going off the good faith of your signature that you're going to repay that debt. To where if you default in that payment, we have nothing to take from you and try to recoup some of our money. But a personal loan is where you would sign it, we'd put that money into your account, you could withdraw it or leave it in there and use it, and then you pay back that incremental payment each month. So $150, let's say, would be what your monthly payment could be back for that $3,000 loan. And then once you pay it off in 2 years, then you're good to go. It's a signature loan. Yep. Some places call them signature loans, personal loans, individual loan. They're all one and the same.
My husband got me a car one time with that signature.
Yeah, yeah. And depend upon the year or the dollar amounts of those vehicles as well.
They were offering a signature loan for drive-by or something like that.
Okay.
They were doing the get a car type thing. And we walked in and I needed a car. I had kids and got me a big old car, and it was easy. It really was.
Yeah. Yep.
I remember that.
Yep. And that's one thing with us is we do try to make it as easy as a process as we can. Sometimes the outcome may not be what you wanted or what you wanted to hear, but that it is what it is in most cases. But yeah, so a signature loan, that is what they are. So it'd be like me reaching in my pocket and lending you the money. And then you're, and in good faith, absolutely. Yeah. To where, But like an auto loan or a mortgage, if you default in those payments, I can come and repossess your home, or I could come and repossess your vehicle, and then we could turn around and try to resell it to recoup some of the difference of what you owe on that loan. Those will also have fixed monthly payments because you're going to have a set interest rate in most cases, a non-variable rate for those loans if that's what you've chose to do. You may choose to have a variable rate, like with a mortgage, depend upon what you choose, either a variable or a non-variable rate. It's also going to be based on your credit worthiness too for those. Just again, making sure that you make all of your payments on time. If you're going to be late, talking with your debtor to let them know what's going on. They're going to be more apt to work with you because I promise they do not want your auto back. They're always just keeping that open line of communication with them. Paying more, like I mentioned a while ago, paying more on what you owe every month is going to pay it off faster. So more money is going to go to the principal balance of what you have borrowed instead of interest back to the financial institution that you've actually borrowed the money from. Make sense? Questions? And nothing is silly. If you have a question, ask it. Service credit. So there are apps and things out there to where you can go on and register them, and it will track and help report to the credit bureaus for paying your utility bills, paying rent. Some landlords will already be enrolled in some of these things. But here's one where you can enroll in Experian Boost to get credit for your everyday utility bills. As long as your financial institution reports to that, then you can utilize it. Because you do have to link your financial institution account so that way it can see when you pay your bills out of your account, and then it will report to the credit reporting agency that you are making those payments.
Another way of using your money to build your credit.
Yep.
Service credit.
Yep. Make your money work for yourself. Retail and store cards. So have you guys ever went to the store and purchased something and they say, would you like to save 15% today by opening up a credit card? Yes. And when you do so, it is very enticing depending upon what you're trying to purchase, if you're going to be able to save quite a bit of money. But the backside of that is those cards are going to be about 35 to 39% interest on that debt. Again, ours starts at our highest is 12.5%, versus 35.99%. And that's even with no matter what type of credit you have, they're going to be that high. So being mindful of not falling for those things, or if you do that to save the money, pay it off once it posts, and then get your rewards and things like that. So with your credit cards, you will have certain times of the month to where if you charge on your credit cards, you pay it off by the end of the month or whatever said date is, then you would only pay what you have charged on those cards, and you will not have to pay interest on that, on the amount that you have charged to that card. When you sign up for cards, they give you paperwork. What happens with that paperwork that we're usually given when we sign up for things? That's right.
You don't read that fine print.
Yep, file 13 it. Yep. And then we end up, in the long run, paying tons of interest if we would have just read it. Because most of the time, it's not going to be told to us up front that if you charge on your card, you pay it off by 25th of every month, you pay no interest. You're only going to pay for what you've charged on that card. So making sure that we're asking those questions or we're reading that fine print just for that reason, to save ourselves lots of money in the long run. Another thing with your store cards or retail cards is a lot of them have point systems that go with them. So learning what is your card going to do for me besides help me build my credit? And then utilizing those points to their fullest ability if you can, because does money come around free very often? Absolutely not. So getting it when you can is going to be awesome. Like ours, Our credit cards, we have what we call You Choose Rewards. It pays you 1 point per every dollar that you spend. And then you can go onto their website and you can cash them in. You can use those points because it gives you free money for money that you're spending on your card. Then you can go on and you can use it on your Amazon. You can attach it to your PayPal. Not PayPal. Is it PayPal? Okay. PayPal just didn't sound right. That sounded like old school stuff.
I have a question about using PayPal apps. Do they charge you an interest for receiving money, or?
I don't think so.
And do you have to report that?
I don't think so. They'll give you.
Income?
No, I don't think so. Your person-to-person apps, you would. Go ahead, June.
There's 2 different forms to receive money through PayPal. You can do friends and family. There's no fees up to $10,000 a year. And then there's the goods and services. Anything above $600 received through goods and services, you'll be taxed through our at the end of the year.
Okay. So friends and family is the way to go.
Everybody's friends and family.
The downside is friends and family offers zero protection. So if I were to buy something from Miranda, let's say I'm buying a car, and I send her $10,000 for friends and services, the car never shows up, there's nothing I can do. Because you're basically telling your financial institution, I can guarantee that this transaction is good.
Mm-hmm.
However, if you do it through goods and services, they protect you up to 30 days.
Wow.
So that's the difference.
Mm-hmm.
And those are just little things that nobody really tells you about either.
Yeah, you have to read very fine print.
Yeah.
Okay, thank you.
Thanks, June. Common credit myths. So checking your credit score lowers it. It does not. The only thing that's going to lower it is if you apply for credit. And then that's going to be like 2 to 5 points each time about 2 to 5 points each time that it is pulled. So if you go to the dealership, they run you through 10 different places, that may ding you every single time that they do so. You can also go onto the websites every year and you can get a free annual report from each of the credit bureaus. And it is just a report that is free. So just a listing of what all debt that you have. If you want a score, you have to pay for that. And it's a really great idea to keep track of it. So if you are using Credit Karma, though that usually does track it pretty easily, or going on to the annualfreecreditreport.com and making sure to pull them to make sure that someone hasn't stolen your identity is very important in keeping track of that. All debt is bad. It's not. So your house, you're always pretty well going to have a mortgage on a home. That's going to also keep building your credit as you're paying that. You have cars, things to that nature. School, that's not a bad debt to have. It may feel like it when you're snowed in with a bunch of it, and then you're questioning, was that really worth me going to school for? But in the long run, yes, it is. You're bettering yourself, and that education loan is not something bad that you have. Bad debt is high interest consumer debt that is not paid off quickly. So kind of like your higher interest rates and such. Making sure that you do not overextend yourself. As an adult, that's one of our hardest things to do, is not see that shiny object and want it and get it. When we know that we have a utility bill or something that we need to pay next week, it's very hard to maintain personal responsibility and accountability to not do so. But it's very important as we're trying to go through life to learn how to manage those things. You guys good for that? Okay. Applying for multiple credit cards at one will boost my credit. No. Nope. So each time it's going to be a hard inquiry. So that's going to tank your credit. Too many hard inquiries in a short period of time can make you look risky to lenders. Instead of applying for multiple credit cards at once, space out applications and only apply for credit when you absolutely need it. Also, if you do have too many credit cards and you just cannot get out of that rut, you can always reach out to financial counseling. We do partner with a company called GreenPath. They provide all financial counseling for free, and they can help you to try to figure out what path is going to be the best way for you to go. They can help you get on a debt management program as well to manage all that debt, or answer any questions or help you read a credit report or any of that as well. Anything? Question?
Could you tell them how long credit inquiry stays on the credit report?
I think it's about 2 years. Yeah. Yeah. 2 years. And if you want to dispute it, then you can contact the credit bureau and ask them to remove it. It's generally 2 years. Yeah.
Okay, thank you.
Mm-hmm. And thank you. So our conclusion is credit isn't as mysterious as it seems. It's still scary for us to be diving off into it sometimes, but understanding what you're doing will put you in control. Small steps like paying on time and keeping your balances low will make a huge difference. Regularly monitoring your credit itself to make sure everything stays on track, and build good credit for financial opportunities and lower costs in the future. So having those the better the credit score, the bigger the vehicle, bigger and shinier the vehicle that you may be able to afford, or more of a top of the line vehicle as well, or house.